Wow. Well, thank you for being here, guys. I'm impressed. There's more people in that room now than there was about 2 days ago, so we're good. It's great. I'm very happy to be here, and we have a staggering panel with a lot to talk to you about. So hang in there. We have great people on there. I'm Raph from Oric, one of the top law firm in the world, one of the #1 law firm when it comes to venture capitalists in Europe. We actually announced today, and that's going to be enough about me in a minute, but we just announced today that we're #1 in venture in Europe for the 33rd quarter in a row. So promise we'll stop counting soon. On that note, I want to introduce our panelists. So starting from just on my right side, Tom, do you want to start introducing yourself?
Yeah, thanks, Raph. I'm Tom Wilson. I'm a partner at Seed Camp. Seed Camp, we are, as the name says, we're a seed-focused fund, investing from our office in London, but throughout Europe and Israel. We invest like everything pre-Series A. So what does that mean? We're currently investing out of our SIC fund, which we raised just over a year ago, which was a $180 million fund. So we can write initial checks of up to $1 million, and then participate pretty much throughout the life cycle of a company. We're sector agnostic, and we've been really, really fortunate to partner with a number of amazing companies over the last 17 years since we founded in 2007. The portfolio size now is like over 500. So yeah, great to be here. Looking forward to this conversation.
Thank you. Maren.
Hi, everyone. I'm Maren Bannon. I'm co-founder of January Ventures. We're a pre-seed focused fund. We're investing out of our second fund now. We invest across the US and Europe, and we do checks of 250 to 500K. And our investment focus is very much focused on investing in the underdogs and outsiders, disruptors of the future. We focus on digitization of traditional industries with the B2B go-to-market. And thank you all for being here today.
Jason.
Yep. Hi, I'm Jason. I was a VC for 18 years. Spent 11 years with Qualcomm Ventures looking at a lot of semiconductor and deep tech stuff. I'm a partially active angel currently. I do a little bit of work with Entrepreneur First to help the cohorts there. Areas that I've looked at as an angel are largely consumer focused. So I have I'm a big fan of highly asymmetric bets, and if you do consumer, you might manage to grab a good one. And Citymapper was the first one that I did, which was an all right investment.
We'll go back to that. Well, thank you for the introduction. As mentioned earlier, Oric works with a lot of investors and entrepreneurs alike in the world. Americans based originally a Californian firm, but we also work a lot in Europe. And as you can imagine, being at the center of the European ecosystem, things have changed a lot over the last few years, last decade. And one of the things I wanted to touch upon is, particularly post-COVID, where things have been a little bit less active than before. From your point of view, each of you separately, what did you see recently change? But also, before we get to that point, what kind of segments you really love? So Jason, you touched a little bit on that just now. But if you look at what you've done in 2024 and before, what are the kind of segment that you really are passionate about and why? Do you want to start, Jason, actually? Go ahead.
Start with me. Yeah. So like I said, historically, I've really liked consumer stuff, but lately, and I don't want to steal anyone's thunder, there are 3 key areas, and one that's jumped out at me and surprised me: space startups, right? I invested into Virgin Galactic back in the great 2021 boom, but I've had a couple of companies come across my radar, and I was just like 3D space construction, and I'm like, what? This is crazy. And then I talked to another VC, and they go, what's your thesis there? And I go, it's space. Space is big. So yeah, big fan of space these days.
Good. Maren, what's yours?
Yeah, we've been seeing a lot in climate, and since we're a pre-seed focused fund, a lot of our investments are driven by the founder, and just it's often a founder bet when we're investing when they don't have revenue or customers yet. We're investing really in the team. We're seeing in climate really strong founders right now. I think it's a space where there's a lot of talent flowing into it, and a lot of founders I think also that have a lot of opportunity cost are making the decision to dedicate their career to building in this space. So at pre-seed and seed, I'm seeing a lot of interesting things in it. We've done actually a couple investments in forest tech. We've done a couple in supply chain, a couple in manufacturing. We're seeing a lot in energy transition as well. I think the question with the space, though, is always like making sure that it's a need to have versus a nice to have, and making sure that there's a really clear ROI for the company. There are, of course, a lot of things that fall a little bit more into the greenwashing camp. So that's, I think, always the sort of lens that we're using when we look at the climate tech that we see.
But you're segment agnostic, and yet you feel like you love that climate space particularly. What's the kicker for that? What is really exciting you about, other than the fact that the funder needs to be dedicated to it, but is there anything special?
Yeah, it feels like it's having a moment where there's just a lot of talent flowing into it, and there's and I'm seeing a lot more strong business models in climate. When I talk to later stage investors, I hear a lot more skepticism about climate, just because I think a lot of people have gotten burned in this space. So I think it's going in with like the right lens on it and making sure that the business models are sustainable.
Tom, what's yours?
Yeah, so obviously we're a sector agnostic fund, so we invest across a wide variety of different areas. But if I was to pick out one that we've been spending a bit of time in, and me personally very passionate about, definitely the healthcare vertical. I think it's been a really, really exciting space to be spending some time. And in particular, probably, I think there's some amazing opportunities in consumer, but more focusing recently on kind of like the B2B side of things, and particularly, which is interesting because I know the previous panel but one of this, one of the companies that we backed as part of this value chain in Cyanogenetics is the idea of like taking drugs to market. So we've seen, even in the last couple of weeks, a huge amount of attention and focus around what's possible with AI and large models around things like AlphaFold and stuff like that coming out of isomorphic labs. So I think that the drug discovery space is fascinating, and we're going to see a huge amount of development and a huge amount of progress happening there, which is already a space that we've got a couple of companies in, focusing on actually figuring out the direction that some of this research can go. So a company there which we did quite recently called Sable Bio, which is ex-Benevolent AI team, who are focusing around kind of like safety, particularly for very early in that process. And then I think about that whole like value chain as you go from discovery to development and then to clinical trials, which is where a company like Cyanogenetics would come in with the way that they're looking to recruit patients for personalized medicine, but also another business that we back called Lindus Health, which is a kind of anti-CRO positioning. And then at the other end, actually looking at how you can submit some of that data to get regulatory approval. I mean, that whole space, it costs pharmaceutical companies or biotech companies, billions of dollars to get a drug from kind of idea and inception all the way through to approval. And I think that in each of those parts of the value chain, there's the potential for like startups to create massive companies and make a huge impact, and hopefully be fantastic investments. So we've been spending a little bit of time kind of understanding that and making an investment, and that's in companies which are focusing on different parts of that value chain, which I think is
very interesting. Capital intensive?
It's interesting because I think that it's capital intensive in the sense of, sometimes the sales cycles can be quite long.
Right.
But, we're looking to back companies that, they're software first companies. So, that some of them who are, like a Lindus, for instance, has a slightly different kind of capital requirement, not like ultra capital intensive, but because they're more full stack and they're actually running trials. But the majority of those other companies actually, if you're looking at kind of powering a lot of the desk-based research, it's a software problem, and the advancements that we're seeing, particularly in large language models, is meaning that people can run these things a little bit more efficiently and lead huge breakthroughs. So yeah, it's not super capital intensive. It's a longer haul, but we hope that the pie at the end is really significant.
Of the efficiency reference, we just talked about climate tech. There's been an interesting connection there. Anyway, Jason, space capital intensive as well, right? What do you think there?
Yeah, I mean, again, I'm talking to these companies that kind of pre-seed, right?
Yeah.
And so they're raising kind of $1-2 million out of the gate, but then their plans for the next 12 months are to go out and raise 18-20 million.
Yep.
So
okay.
Yeah, very capital intensive.
You see them staying in Europe to do
and
that?
in climate tech as well, some of the companies I've spoken to, holy wow.
Yeah. Right, okay, so now that we have a better understanding of what you do, what are the key segments, one of the key subjects of today, and actually the title of the panel, which you can't see here, but it is basically what are VCs looking for in 2024, right? So what has changed, what do you see today, and what do you expect to see in the future, near future anyway, because we don't really know past 12 months, really. But based on what you just told us about your respective areas of focus, the different sort of segments you're looking at, what have you seen recently change, and what do you think seems to change in? So, Maren, do you want to start? What do you feel?
Sure. I'm curious what you two are both seeing, but over the past couple of months, I've seen the market really pick up and get really fast and really busy. This is pre-seed and seed where I focus, but at that part of the market, I'm seeing rounds go really, really quickly. It almost feels like back to 2021, which is a little bit frightening.
On valuation, though, right?
Even on valuation, but it's bifurcated. Yeah. So I'm seeing that
that was an on-purpose question.
I'm definitely seeing this sort of barbell where there's a set of founders, and I think it's certain industries like AI, certain demographics, geographies where founders are commanding really high valuations for very little traction at pre-seed and seed. And then there's a huge other set of founders that just doesn't happen to be in one of those hot areas where it's still really hard. At Series A and Series B, it still feels like it's slow and it's harder, and that the metrics and kind of goalposts that founders need to hit for that stage are still really hard. But the early stage feels busy, and I think there's a lot of different reasons behind that, but it's good and bad, I guess.
Yeah, I mean, I'd agree with what Maren's saying. I think that the very early stage that we focus on, those kind of seed rounds or definitely first rounds the company raises. I mean, that didn't drop off.
No.
It never really dropped hugely. Probably like 2019 was insane, but then even when the kind of market dropped, like that stage was probably the most insulated from the kind of like fallout.
But on that, sorry to interrupt, but so my gut feeling, and then what we see on the market is actually the number of deals might have dropped a little bit in terms of the frequency, the fast-paced access to deals, even though the round type were probably increasing because you got less and more money invested. Is that what you're seeing as well?
Yeah. I think we've probably seen a little bit of that, and I think that it's never felt quiet at the pre-seed and seed stage. Yeah. I'd say, and actually there was some dynamics that have maybe stopped being as apparent, where you had kind of multi-stage funds who typically only write investments at kind of Series A plus. During a period of time when they were nervous about writing those bigger checks, they started to come earlier and earlier and do seed, and actually seed became quite inflated. I think that we're now starting to see the market kind of move back to the way it should operate. So we're seeing kind of Series A's get done. This quarter, I think, is going to be one of our busiest quarters for Series A's. Probably not in the last 33 or whatever the quarters of Oric was, but it's going to be like definitely one of the busiest ones in the last couple of years. So that feels like Series A is much healthier place. And then it still is slow as you get towards growth, right. Kind of like B's and C's. I think they're still getting done probably only in exceptional companies, and even those exceptional companies are often doing more internal rounds. But seed and pre-seed definitely feels like very, very busy.
On the Jason, probably same feeling, I suppose, but on the angel side, which is very close to the pre-seed anyway, what do you see a lot of difference from before now, even though you do less?
So if I look at just the companies at Entrepreneur First, right?
Yep.
Last year it was tough. Like it was hard for companies to really good companies. They struggle to raise money. Mm-hmm. This year it's a different story. It's much easier to raise. Again, I'm just going to echo the same.
Yeah.
Pre-seed is back. Seed is definitely back. A is still sluggish, and B is still lethargic as well.
We're massively lacking growth capital in Europe, as we know, so that's where we get to.
Yeah, I think so. I think that that's probably the space of the market that is less well served. You could say that there's also just less candidates which fit the bill for Series B at the moment, because there's still kind of a digestion happening in the market. I think we've almost had it from the kind of top 2019, 2020, where companies all raised a stage ahead of where they were. Mm-hmm. And so you had kind of companies which raised Series A on seed metrics, if that, and they couldn't go and raise a Series B now. Okay. Like, no way. And so you've got like actually the companies which are maybe raising Series B outside of an elite few, which are still growing and still doing really well during that period of time. They're probably companies which are raising more kind of flatter looking rounds. So I think that needs to come through, and then we'll see these new companies which are just being seeded and raising Series A's in this market be amazing candidates for Series B.
So I'm cautious we're remaining 4 minutes on our time, which obviously goes way too fast. But I want to be able to answer the question that we've asked so that the audience actually get what they came here for. So what do you think, you're looking for really now in 24 and moving forward that might not have been something that you were looking for before? What is new about this business? Maren.
Yeah, two things that we're looking for. One, we're looking for more runway when we invest at pre-seed. We like to see 24 months. And 2 years ago, I think we were comfortable investing in companies that maybe just had 12 months because it was so much easier to raise and you could have a lot more confidence they'd go out and kind of keep raising every 6 or 8 months. And that environment just it's not quite the same now. And then I think just also looking for founders who are good fundraisers. And it doesn't mean that they necessarily have had fundraising experience, but founders who can, you can tell, can kind of pick it up and understand how to sell. Because I think when the market is not quite as easy, you want people that you feel like are going to be able to raise follow-on rounds more easily.
Jason?
Yeah, I think the founders that I'm talking to now, I'm really looking at folks that understand the market that they're addressing very well. Either they've been the customer themselves and they acutely feel the pain that they're trying to solve.
Yep.
And it can get to revenue pretty quickly. Again, as we get to seed and Series A, downstream investors are really looking for some solid metrics, right?
Yeah. Tom, same thing?
I mean, it's the same. I think the one thing I'd add is this kind of cycle that we're hopefully coming out of or we've gone through really reiterated that grit in founders.
Yep.
So I'm definitely drawn more towards founders who have shown that kind of entrepreneurial grit that you need, because I think it's always something you've needed. None of our success stories have been up and to the right, in everything perfect. But there was a period of time where maybe I think we lost sight of that a little bit, and we went with the shiniest CVs and backgrounds rather than, is this person actually going to be a great entrepreneur?
Right.
And that's a huge, huge thing that we're very, very focused on.
I don't know about you folks, I'm a little bit disappointed. None of them said about a good law firm. I don't know why, this is strange. Right, well, we have 1 minute left, so I want to ask you the last question, and we could talk about this a lot. Moving forward, if you look in the next 10 years, basically, trying to project yourself as a VC and investor. So in your world, in your ideal world, what would you expect to see change happening in the next 10 years? Any one wide prediction? Just to make sure we completely, proven wrong in the next 10 years. Jay, anything? Jason?
Yeah, me. Look, I think algorithms are going to eat VC's lunch.
Yeah.
I've been talking to several teams, and they're all building some really cool algorithms. And some of the results I've seen are smarter than some of the best VCs that I know. So yeah, that's my
So you're retiring soon.
Renaissance technology. The same thing applied to VC, making all of us irrelevant. Yeah.
Maren?
Yeah, I was on a panel a few months ago in San Francisco, and the other VCs on the panel were saying VCs are just sad right now. It's a hard market. Companies aren't doing as well. But I think my 10-year thought is that tech is just going to get bigger, and I still feel really bullish on the long-term opportunity for tech.
Tom?
I'd like, in 10 years, I'd like to see us have a different relationship with tech. I'd like to see us not looking down at our phones. And so I think in 10 years' time, we might have a different interface.
Yeah, you look at your...
Yeah, but something which is, from a, not just innovative, but also just better for society, better for people, make sure people can socialize, better for children, better for mental health. It's not a big wish list, but I think that we'll look back in 10 years and laugh at when we used to be looking down at our phones constantly, or trying to speak to friends and people checking their phone at the same time. That's what I hope with 2 young kids, that's sorted by the time they're old enough to have that kind of technology. That's what I hope for 10 years.
I'm happy to hand on that note. Thank you very much. You've been a great panel. Jason, Maren, Tom, thank you for your time.
Thank you.
Thank you.